Hey guys, this is John. Welcome to the free video. And if we look at IWM, and there's been some current concerns like IWM is weak, look what it's doing. Well, a normal stock, when it moves 3 ATR away from the mean, is going to start working its way back. So we did that today, which is interesting. So we'll go into Friday, kind of like right at the mean, and from there it's kind of a, the whole idea is, you know, what can we do from there? And now part of this is, of course, if the trend is going to continue, we launch higher, but a lot of this is also getting positioned for the French elections. So there's a lot of concerns like, okay, what's going to happen if Le Pen wins, or, you know, everything like that. So I actually kind of like the idea here of buying some VIX calls, even VIX futures to hold into the weekend. It's like one of those things where, you know, if the market rallies, the VIX isn't going to go very low. It's just kind of like, okay, maybe it drops to, you know, $10. But if there's something unexpected, it could snap back to the mean. So I kind of like the risk-reward ratio on that, and that is something that I want to set up. And then from there, what I like is Snapchat. We got earnings next week, and what I'm looking at is kind of what happened to Facebook. And Facebook rallied into earnings and then sold off a little bit after earnings. And I'm looking for the same thing to happen to Snapchat. So how to take advantage of that, how to do it, what are different strategies around that? Well, on something like that, because I'm looking for a rise in the stock's price and implied volatility rising. And in fact, when we first got in this position, implied vol was 71%. It's been rising every day. I think it's going to get to 150. What happens is on sideways days, these options kind of hold their ground, i.e. you don't see, like, this theta decay isn't really real. Like if it's going sideways, you're not seeing premium decay. It's actually holding on because of the rising implied volatility. But then if you get to go up, then you get a kicker. So it's like, it's very rare because the destruction of a call option is a sideways market. I mean, obviously, if the market goes down, it's not going to work, right? But sideways is kind of that secret hidden death knell of all call options. But we get a free pass here because sideways is okay because of the rising IV, and if it does rally, we get that kicker of expanding price and implied volatility. So I still like these in the next week. The 24s are attractive, and see if these are, you know, maybe trading by $1.50 by earnings. Now, to be clear, I'm not planning on holding through earnings, just to the day of earnings and then handing them off to someone else. All right, hope it helps. You guys have a good night, and we'll see you at the next update.